Hey everyone, Bennett McDowell from TradersCoach.com. We've been getting a lot of emails from folks concerned about the markets, and rightfully so. Okay, I can certainly understand that. They've been definitely free falling now. So I thought what we would do is take a look from a technical standpoint of what's going on with the markets and take a look at the Dow Jones Industrial Average and the S&P and see if we can determine some price target zones of where this thing is going to eventually end after its free fall. So let's go ahead and take a look at some charts here. Okay, to start off, the market basically dropped today, and it's Thursday, dropped 1,190.95 points. And as you can see, it ended at 25,766.64. So that's where we're at right now. Now, if we take a look at some of the charts here, first thing I want to take a look at is the Dow. And on the left-hand side, there's two charts here. On the left-hand side here, there's a 60-minute chart. So each price bar here represents an hour or 60 minutes. The chart on the right is the daily chart, which most of you are probably used to looking at, and that represents each price bar a full day. This is considered the intermediate trend. This is considered the shorter term trend. So let's take a look at both and see if we can gauge what's going on. I'm going to start first with the daily chart. I'm going to open it up and give you an overall perspective. So you can certainly see there's a lot of our indicators overlaid on the price. But if you go way back to 2009, which is way back in this area here, this is really where this particular trend that we're working off of really started. And if we draw in the fib retracements, we're talking about the market coming down to a fib 4 level of around 21,979, all the way down to a possibility of 17,257. So that's this target range here. Now, if this is a 3, then that's going to be a 4 if you're an Elliott wave person. Now, we're going to focus in, we're going to zoom in on the price, but what I wanted to do is put this in perspective. Because when we draw fib retracements in, what we're doing here is we're taking a look at the entire move up, and the fibs then do an analysis on the normal retracements that are usually seen after trends of this nature. And so you have to go back far enough in the data field, which is back in 2009, so you can appreciate how this level is drawn in. All right, so let's take a moment and zoom in. Okay, I've zoomed in on the chart here so you can see. What I want to quickly go over, and many of you are familiar with our indicators, and if you're not, that's okay, because I'm going to make a really quick summary on what they mean. But basically, momentum is negative. This indicator called the PTF is calling for more lows, and the trend line now is basically to the downside. It's bearish. You can see where we broke the upper trend line, and now it's being replaced with this one here. So we've got a situation where the market is heading down, and according to what we're looking at from a technical standpoint, it's not done yet. And in fact, we think the target range for this is this area right here. And that value is between 21,979.78 all the way down to 17,257.70. So that's quite a significant target range. But as you could see, based on the fact of how long this uptrend has been in place, that retracement level really is quite normal. Now, once we reach this level here, all right, we should see some bullishness come back in, and the market will then recover and make new highs. But for right now, it's bearish. And if you're a short-term trader, you should be focusing on short trades. And of course, the futures market's great for that because it's so easy to sell in the futures market. So, a couple things here. You're not going to go straight down, all right? You may have a couple days of bullishness. We could come up to 28 before heading down. That's all very possible because the market breathes usually. But even if we have some bullish days, with this PTF still red and the momentum still red, that is not a good sign. That means that more selling will return. All right, so that's the daily chart. Now that's the intermediate trend. So that's probably good for a few weeks to several months. Let's take a look now at the shorter term chart here on the Dow. And this is the 60-minute chart. This is going to give us probably a good idea of what's going to happen in the markets for about another week or so. All right, so as you can see, our trading system called the ART system captured this trend to the downside beautifully. Look at all these pyramids. You could just roll your stops right on down. But it's not over yet, okay? It's still going down. We have a red PTF on this time frame too, and notice the momentum is red, and we have also a red trend line right now. So that is indicating more lows are coming. I would expect some type of bounce at some point, but I don't think you're going to have a very significant opportunity to make much money on the bounce. So you want to pretty much stay to the short side. So the low on this, once again, our target range for this particular bottom here is 21,979 to 17,257. All right, let's take a look at the S&P. Okay, so here are the charts for the S&P. Once again, the 60-minute chart is on the left. That's over here. And we have the daily chart here. So in this case here, notice very similar to the Dow, we have a bearish momentum and a bearish PTF and a bearish trend line master. So all three of those are bearish. So that's indicating that we're still heading down. Now the target range for the S&P here looks between 2545.04 down to 2012.50. So that would be the target range right here. Now if we look at the 60-minute chart, you can see once again the pyramids capturing this really nicely. And down this side here, it looks like we have a yellow PTF here. So we may be getting ready for a bounce. So I wouldn't be surprised if we come up a little bit here and before heading down. So we're going to have to watch that tomorrow and see if that bounce does come up. If it does come up, we may see an opportunity where we can certainly draw in some fibs, something like this, maybe from here to here. And if that's the case, then we can expect a bounce into this target range here. All right, so a bounce between 3,099 to 3,199. So that's possible. All right, one more chart we can look at. Let's drop down for you E-mini traders and go and take a look at the S&P E-mini on very short time frames. Okay, so here is the E-mini charts. Now, this is for day traders because we got a 2-minute chart on the left-hand side. We got a 5-minute primary chart in the center, and we have our 30-minute chart on the far right. Now, one thing I want you to take a look at. All the PTFs are red, so more lows are coming soon because these are short term. And you have reds on all the trend lines, and the only thing that's green here is the owl on the actual 5-minute time frame, which is kind of interesting. So with a red PTF on the 2, all right, we could see actually some more selling before we get into this target zone here, because I do think we're going to get up to this target zone here before selling off. So this could be a 3, 4, and a 5. So for tomorrow, this is kind of what that's looking like, but we're going to have to watch the 2-minute time frame. So I imagine we'll probably dip down a little bit lower, maybe take this bottom out here, and then move back to the upside. So we may have to draw those fib retracements in again. But bearish, so the whole thing is bearish. So we can expect a pretty bearish open at the in the morning tomorrow for the most part. I do think probably you'll get some relief at some point during the day, maybe a little bit pull up into this target range, but probably more lows to come before that happens. So overall, the markets are in a fairly significant correction at this time. I think it's safe to say that, and I think the target range is not yet reached. So I just wanted to give you this update and let you see what's going on with the market. I think it's important. If you're a more subscriber, we're going to do a complete update and a complete analysis over the weekend for you, so you will know what to do on Monday of next week. If you're not a subscriber, this is the time to sign up, because this is the kind of stuff we live for markets like this. So we're going to have some stock opportunities to the short side as well in the Moore report. And so definitely download that and pay attention to that if you're a Moore subscriber. Okay, so that's it for today. Don't panic. All right, these things happen in the markets. We've seen it happen before. The key is to take advantage of it. Okay, thanks so much and have a great day. Always use risk control.
Serving traders worldwide since 1998, TradersCoach.com provides educational services for traders and investors. We've developed trading software to help traders of every level improve their skills. Our site is dedicated to providing you with all the resources, software, and educational material you need to achieve your trading goals. It's because of our years of experience, attention to detail, and exceptional customer service that we're the right choice. Call us today.